Morning. Good morning to you all. I always say it's a pleasure to be in a room of like-minded people. I love networking. I love it so much. And I know they normally say there's strength in numbers, but today, just for today, don't worry about the numbers. Let's worry about the value and the networking that we're going to get. So let's make the most of this opportunity, and I'm excited to be here. I hope you are as well. Without taking much of your time, I am just going to jump straight into it. My name is Samuel Chinya, and I'm here on behalf of Blue Hector. Blue Hector is an accounting firm that's based in Milton Keynes, and we work with health and social care companies, providing accounting and payroll services. We niche within the healthcare sector because it helps us specialize, and we know that with the knowledge and expertise that we're getting, we'll be able to offer a good value to you guys. In terms of what we do, so by law we offer the boring stuff, which is your annual accounts, which need to be done for every company that is registered, company house submissions, your HMRC submissions as well. We offer tax advice and consultation. We use, you will see, a lot of technology to help us manage your businesses. So a lot of cloud software systems out there, again, just to deliver a seamless service to you guys. We offer what you call an enhanced payroll service, which I'll touch on a bit later, as well as VAT registration and submissions. Now, before we get straight into it, I always like to engage the crowd for us to help each other. It's the first event of the year, right? For HYP. And I know a lot of us, when the year starts, we set our goals, we set our objectives, we do our planning, right? So I have an exercise for everyone who's in here today. I believe on your tables you should have some paper and pens, hopefully Blue Hector pens. And I want you to imagine a year from today, receiving a letter from you. I know I did this last year, but I don't see any faces of people who were here last year, so it's good. I'll touch on that last year point very soon. I want you to write a letter to your future self that hopefully you will give to me, and I'll post to you 12 months' time. You'll be receiving this letter exactly right about, I don't know when the next event is going to be the first one. You receive this letter from yourself to yourself. You know how to talk to you. You know what you want to have achieved by then, and you know the goals that you have set. So I'm just going to give you a few minutes to do that. Whilst I'm giving you a few minutes to write a letter to you, from you, last year, what I did was I handed out envelopes to everyone who came. There were more than 100 people. Let's say 100. I only received 13 back. So I posted 13, which is about 13%, give or take. So I thought to myself, you know what? I'm going to save my envelopes today. Not the fact that I've only bought 13. I do only have 13. So after you write your letter, come see me. I'll give you your envelope. You put your address, you seal it. Then I know you're not wasting my paper. Okay, that's fair, right? Yeah, everyone seems to agree. That's fair, right? Yeah. So for those who are writing, please continue to write. We don't have a lot of time, but write a letter to yourself, from yourself. And I think it will be an interesting read when you get this sometime next year. I'm trying to see who was always copying in school, but yeah, it seems like we have a good crowd here today. Thank you. Now I think we can continue. Today I just wanted to touch on, I don't know if it's if boring is the right word, but I'm going to be touching on a boring, controversial topic today, which is tax. It's one area that I know a lot of people shy upon, but I think it's one that we're going to be focusing on today. So essentially today we're just going to be focusing on mastering financial insights for effective tax planning and tax management. I think it will become clear why I chose tax as we move on with the presentation. Who knows the 4 main taxes that every business, especially within the health and social care sector, should be aware of? Three or four main taxes that a company should be aware of. NI. Someone said NI? Corporation tax, yep. P-A-Y-E, yep. Income tax, business rates tax. More than 4. Anyone else? Sorry? VAT, yep. So, the 4 taxes that we're going to be focusing on today. Number 1, corporation tax. Corporation tax is the tax that your limited company pays. It's essentially your sales, expenses, profit, we pay tax, then what's left is your profit after tax. Put simply, is the tax for the limited company. That's tax number 1. Tax number 2 is PAYE. This is tax if you have employees within your company. So if you have employed people, you're running payroll, submitting what we call RTIs, which is real-time information, to HMRC. Once you submit these, you need to be paying what's called PAYE tax every 22nd of each month. The third tax we're going to touch on is self-assessment. Now, self-assessment is the individual/director tax that you, as an individual, will need to pay. It's separate from your company tax. It's separate from your payroll tax. It is what you, as a director of a company, needs to pay. The last tax, VAT, which we are not going to be spending a lot of time on. Now, why did I choose to talk about tax today? The reason is simple. We've unfortunately, or fortunately, been seeing a lot of HMRC investigations when it comes to tax for limited companies. This is happening, and it's affecting a lot of companies. I know Godfrey walks around, travels around the country, and you do mock inspections for CQC and audits. I believe maybe this is one area that people actually need to start having mock inspections for as well, because a lot of companies are suffering, are being found wanting when an investigation is launched by the HMRC. Now, you might be wondering what triggers for an inspection. I'll put it simply and straight out there. Number 1, whistleblowing from your employees. If you're doing something incorrectly, they will report you and you're going to have an inspection. Let's just get that out of the way. If you're not doing things right, you are going to be found out. As simple as. Routine inspection. HMRC can have a routine inspection. They can call you up on any of those taxes that we touched on for a routine inspection. And they're not, what can I say? You don't have an option if they choose you for a routine inspection. You have to comply. They will advise you when they're coming, what they'll be looking at, how they'll be looking into it, and you have to comply. It could be a follow-up visit from a routine inspection that they did previously. Again, they'll come back to see if you implemented the changes that they told you about or the changes that they suggested you do. It could be that they've seen significant changes within your company profile. I'm going to give a silly example. Your profit has moved from 20,000 to 200 or to 2 million in a space of 12 months. That can trigger an inspection because they want to make sure that you're doing things the right way. Concerns raised, we already spoke about that. Could be via your employees or other providers that you actually work with. That could trigger an inspection for you. And also, if you are continuously submitting tax returns that have errors on them, if you're not submitting good quality work to the tax authorities, that can trigger an inspection. Now, when HMRC comes for an investigation, how far back do they look, or how far back do they ask to look into records? If it's a random inspection, routine check, they can go back up to 4 years. Standard, they don't need a reason. They will ask for 4 years of records. So we're in 2025 now, they could be asking for something that happened in 2021. They have the powers to do that. Who in here is keeping records to the extent that if someone comes and starts to ask about what happened in 2022, you can be able to provide those records? Show of hands. Don't be shy, guys. You're doing wonderful things. Show of hands. It's no surprise the lawyer is one of the first people to put his hands up. I'm sure he knows the importance of that. That's on a routine inspection. The inspection period can increase to up to 6 years if they find any careless behavior. This is really interesting. Careless behavior and human error. The accountants that you are trusting to handle your finances, if they're continuously making errors and are displaying careless behavior, HMRC can ask up to 6 years worth of records as they do their inspection. Now, if you're found to be deliberately evading tax, they can go as far back as 20 years. 20 years. I'm sure you know it's the director's responsibility to look after the company. Who in here can produce records for up to 20 years? Food for thought. Now, just paying a closer eye on some of the taxes that we spoke about, I want to just give you an insight on why they come for an inspection. If it's around pay as you earn, which is the tax that we spoke about when you have employees and you're running their payroll, if you're not paying your tax bill and you have an overdue tax liability to HMRC, this can trigger an inspection. What do I mean by this? If you have employed people, you know you withhold pay tax on them, you withhold NI from them, and hopefully you are pension registered, you're withholding pension from them. That money that you collect from them, you need to pay to the HMRC. If you're not paying and your liability keeps on increasing, that is a risk because they can come for an inspection. They want to find out why you're not paying. And I am sure if any have had an inspection around pay AYE, they know it's not a joke. It's a serious inspection because effectively you're withholding their money and you're using it for something else. They don't take that kindly. They literally drive up to your offices, ask for records. They would want to speak to your employees, and effectively it is not something that I would, what can I say, I would wish on anyone. It's good to make sure that you have your house in order. They also conduct what they call national minimum wage inspections. This is just to check that you're paying at least the national minimum wage to all your employees. Similar to what Andrew was touching about earlier on. They inspect that. And again, it's employees who know whether they're being paid minimum wage or not. Now I know within, especially dom care, home care, there is this discrepancy about travel time, breaks, which I think a lot of providers, it causes a lot of questions on who pays for travel time, who pays for employee breaks. And some don't pay for that because they're saying it's not contact time and the council is not paying me. Why should I pay my employees? It's one area I would advise you to just go and check again. They can also come to inspect you about payroll because of your sponsor license. Again, just to make sure that you're complying with everything that's set up in your sponsor license. It is really, really important that if you have a sponsor license, you're adhering to the pay structures or the pay fees that you've set up in there. When it comes to corporation tax, again, if you're not paying your corporation tax, they will come for an inspection because you owe them money. Number two, the errors that we spoke about. If you're filing your accounts late and they have errors on them, they will come for an inspection. If there is suspicious movement, which we already touched on, so your company suddenly just grown or shrunk within a very short of space of time, it could be possible that what has happened, they will come for an inspection. Inspection doesn't mean there's anything wrong, but their findings will prove whether there's anything wrong. Hopefully that's clear. Self-assessment. When it comes to self-assessment, again, if you're not paying, they will come for an inspection. I think this was actually not updated because I think it's still talking about pay AYE. Self-assessment, they'll come for an inspection if you're not paying for your self-assessment. Number two, if you're not declaring any other income that you're having. So they'll also want to know how you're calculating your payroll. What system are you using? How are you rotering your staff? What system are you using? They'll ask to see all that as well. If you have received any notices in the past and you have not yet actioned what they spoke about, they will want to see that as well. Now, when it comes to avoiding issues for an inspection, like I said, an inspection can be random, but we just need to make sure that when it happens or when it comes, you're not found wanting. Number one, what a lot of providers are caught up on is not having accurate record keeping. We do not keep good records. We do not have records. For the hotel that you booked for this conference that you're staying on, some don't even have an invoice for it. Some either use the business bank